Today, we're going to talk about why I have 6 different savings accounts and how you can use a multiple savings account strategy to help you achieve financial independence. Coming up. I'm sure we've all heard it said a million times before that we should save our money. I know for me growing up, I was always taught by my parents that I need to save for my future. So I did what most people do, and I opened up a checking account and a savings account as a high schooler way back in the day when checks were still more commonly used than debit cards. And that'll give you a clue as to how old I am. But like me, you may also have a checking and savings account that you use for your day-to-day financial transactions, and that's pretty much all you have. I think it's a good foundational starting point. However, I think it's just that, a starting point. So let's talk about it. Simply put, a savings account is a deposit bank account used for storing funds in a safe. We'll talk about why I'm putting that in finger quotes in a bit, but it's where you put funds in a safe, secure, and federally insured location. Traditionally, one of the draws for savings accounts is that it pays you an annual percentage yield, or APY, on the money that you hold in there. So basically, you earn a small percentage of interest that is deposited into your account every month just for holding or saving your money in there. Now, unless you've been living under a rock, say, the past few decades, then you know that these interest rates are absolutely laughable. So if you're looking to retire off the interest of your savings account, then, well, you'll never be able to retire. That's because these interest rates are not nearly enough to retire off of, let alone break even with inflation. In other words, the purchasing power of your money that's sitting in your savings account decreases year after year, essentially losing value. And with the recent report of inflation reaching 7% this past December, your $100 just melted away to $93. So with that in mind, I think keeping large sums of money in a savings account without a purpose is not safe and secure as you might think, because inflation is robbing you every month. You'll need to look into other options if you are serious about preserving the value of your money and growing your wealth, like Bitcoin, the stock market, or real estate. And in full disclosure, I'm not a big fan of centralized banking for many reasons that we won't get into in this video, so I don't keep a lot of money in my bank accounts at all. But I do have multiple accounts that I use for different purposes, which I'll share because I think this might help you to organize your finances and give each dollar a specific purpose. Now let's talk about why I have 6 different savings accounts and how it helps me on the path to financial independence. I look at my banking accounts like this. My checking account is my quarterback and my savings accounts are my receivers. My checking is the starting point or the hub of where my funds are deposited into, which are usually payments that are work related. Once I budget my money and determine the amount of money that I need to leave in my checking account for bills and other monthly expenses, all the extra left over will either go straight into my crypto portfolio, investment brokerage, or my savings accounts. The reason why I do this is that it helps me to give my money a purpose. Instead of me just putting a lump sum of money in my savings without knowing what it's for, I send it to one of my accounts that have a specific purpose, like my emergency fund or saving for a wedding fund, as an example. This also makes it easy for me to track when I reach my target savings goal for each individual account. For example, if I have a savings account dedicated for my emergency fund and my savings goal is $15,000, which would be several months worth of expenses, then I would easily be able to see when I reach that goal in my savings account because there's no other funds going into that account. It's so convenient to have several different savings accounts for different purposes. For example, I could have one account dedicated to buying a car, one account dedicated for saving up for Christmas gifts, and another account dedicated for a down payment on a home. It's easy to see all of your expected purchases separated and keep track of how much you have saved up in each account. Savings accounts are ideal for these short-term savings because these accounts are liquid, meaning you can easily take money out. But there are limitations to how many times you can withdraw money out of the account per month. This is standard across all savings accounts in the US. Knowing this, I'll be a little less tempted to pull money out from the account all the time. So let's talk about my current savings account setup so that I can give you a real world example of what I'm talking about. Keep in mind, this is just how I like to do it, and this is my current setup, which is obviously subject to change depending on my goals and what I'm saving for. I currently have 6 different savings accounts, all within the same financial institution, which makes moving money across accounts a breeze and instantaneous. It is possible to use this strategy across different financial institutions, but keep in mind that you might have to go through additional steps when it comes to transferring money in and out. Also, be aware of any fees associated with having savings accounts, which will depend on the financial institution. For mine, it's free, which makes the strategy worth it. So I have my general savings account. I don't necessarily keep money in here, except if I want to park a certain amount of money temporarily if I'm ever undecided on where I want to send it. Or if I'm unsure whether I want to send my money into my brokerage or crypto exchange, I'll just park my money here until I decide. So my funds don't stay here for too long. Next up is my emergency savings account, which I have at least 3 to 4 months worth of expenses set aside for emergencies. This is money that I currently keep in cash, meaning I don't have it in any investment and I simply don't touch it. So for me, I will only dip into this account in a worst case scenario circumstance. For example, if I came across a few months of not making nearly enough income to pay my bills due to lack of work as a freelancer, then I would take what I need to get me through the rough patch. Luckily, I haven't had to use it yet, but it's there just in case. I definitely recommend that if you don't have an emergency savings account set aside, that you prioritize this first. Start with saving at least $1,000 and work up to building it up to 3 to 6 months worth of living expenses. This will protect you in the case of an emergency and eliminate the temptation to fund your emergency using a credit card or a loan. By the way, I'm looking into eventually keeping my emergency savings account in another vehicle, such as a stable coin or another alternative that will give me the ability to earn higher yields than a traditional savings account. As I explore this further, I'll keep you posted. The next account that I have, and it's my least favorite one, is my tax account. As a small business owner and freelancer, I'm responsible for paying taxes on the income that I earn through all my earnings made from my US clients. And I say US clients because I do a lot of freelance work here in South Korea, which is where I'm currently located, and taxes are handled differently here. So each time I get paid from a US-based client, I set aside a percentage of that income and put it into the account until it's time to pay Uncle Sam. Another savings account I have is dedicated for electronics upgrades. This is an account that I set up about a year ago because I realized that with certain electronics, like my computer or laptop, will eventually need to be upgraded. I also include camera gear or anything related to my production business in this account. So a power tip for you is if you know that you're going to inevitably need to upgrade or replace an item, whether it's a computer, a TV, or anything really, set up an account and start saving for it early. I literally just upgraded me and my fiance's MacBooks after saving in this account for a few months. My next savings account is currently dedicated to saving for a car. I don't plan on purchasing a car just yet, but I will be at a certain point over the next year, so I'm able to proactively save for it. And last but not least, I have my investment savings account. This is where I keep my cash if I'm ever undecided about sending it to my investment brokerage or my crypto exchange. My money doesn't stay in this account for long, but it's there so I can set it apart from the rest of my funds. Now, just to give you a few more ideas of different purposes for your own savings accounts, consider some of these. If you know that you're gonna be going crazy on the Christmas shopping every year, instead of using your credit card, set up a separate account and put a little in it each month up until Christmas shopping season. If you're a homeowner, have an account dedicated to home repairs, especially if your insurance doesn't cover it. At a certain point, your washer and dryer will need to be fixed or replaced, or maybe the shingles on your roof have about 3 years of life left on them. Or maybe you know that you're gonna wanna take a summer vacation out of the country for 2 weeks in the summer. Have a travel account to save up. These are just a few ideas, but you can come up with your own based on your own situation and financial goals. Hopefully, you can see why having a saving strategy like this can help you to stay organized with your money, stay accountable to your savings goals, and ultimately achieve your personal finance plans without having to stress about where the money will come from. I know that this strategy has really helped me to stay organized and intentional with my personal finances, but if you prefer a different method of saving, that's totally fine too. As long as it helps you to reach your goals, then that's what matters the most. Just do me one favor though. Unless you have a purpose for your savings like we mentioned earlier, don't keep large amounts of money in your savings in hopes that you will grow or protect your money. Remember, every day your money is in your savings, it loses value to inflation. So make sure that you have an investment strategy for your money and keep your savings for shorter term goals. I hope you found value in this video. If you did, hit that like button on the video and share this video with someone who can use a little financial inspiration. And question of the day, what's your current saving strategy? I'm curious to hear your thoughts in the comments below. Smash that like button if you haven't already, and I'll see you in the next video. Peace.